Hello, my name is Rob Poterucha and I'm a tax supervisor here at MHCS. Today's topic that we'll be discussing is sales tax and the changes that have occurred over the past year or so. Before we get into those changes, I want to get a couple of definitions out of the way. First, let's define sales tax. Sales tax is a tax that is imposed by a local or state government that is added to the purchase price of a product or service. For example, let's say you purchase a candy bar for $1 and the sales tax rate is 6%. Your out-of-pocket cost would be $1.06. That 6 cents is then remitted by the retailer that you purchased from to that local government or state agency. The second definition I want to talk about is use tax. Use tax is the responsibility of the purchaser and is required when sales tax is not charged. For example, in that same scenario, if you were charged $1 for that candy bar and the sales and use tax rate was 6% and you were not charged sales tax, technically you would have to remit 6 cents to the government. Far less common, retailers were required to charge sales tax, but wanted to define that anyways. Now we kind of get to the changes, but until we do that, there's two cases that I want to talk about that are really important when it comes to sales tax. The first is Quill, which happened in 1992 in a case that went all the way up to the Supreme Court. Basically, it said that a company needed physical presence in a state for that state to impose sales tax. So for example, let's say a company in Kansas that sells things through a mail catalog sells something to a customer in Iowa. Under Quill, that purchaser in Iowa would not be charged sales tax because that company in Kansas did not have physical presence. A lot of people thought this was outdated, and so we arrived in 2018 with a new case called Wayfarer, which is the online retailer. This case went all the way up to the Supreme Court as well, and the Supreme Court decided to reverse the Quill decision and now allowed states to impose sales tax on companies with no physical presence. So in that same example, Kansas company that sells things through a mail catalog, they might be required to charge sales tax to that customer in Iowa. It's important to note that sales tax would be the Iowa sales tax, not the Kansas sales tax. And so now how does this change businesses? With a lot of companies being online retailers selling things through websites such as Amazon, eBay, things like that, are those companies responsible for sales tax in every state that they sell? Well, it's possible, but the good thing is a lot of states have imposed thresholds and transaction thresholds to kind of not charge sales tax to those smaller companies. So for example, a lot of states have imposed a $100,000 sales transaction or 200 separate transaction threshold. So if you have $90,000 in sales in 100 transactions, you might not be subject to sales tax in that particular state. Now, with Wayfarer, states have been revisiting their laws because every state's looking to raise revenue, and this is one easy way to do that. So states have been defining things such as digital products. So for example, here in Iowa, Netflix is now subject to sales tax. Previously, it was not subject to sales tax, and that's a direct result of this Wayfarer case. So a lot of digital products are now being subject to sales tax in states that they previously were not subject to. If you want to check out any other videos, feel free to browse our YouTube channel where we have other videos on different topics ranging from tax to client accounting services to audit. And if you have questions about this, feel free to reach out to us or give us a call. We'd be happy to help.